from our suppliers worth 60,000, and normal business days we have to pay back in 15 days. But we don't have money in 50 days. We said to our supplier, we would pay you in 90 days. The supplier will say that, look, there are going to be extra charges, and those charges are in the form of interest. So since you are using my 60,000 for 90 days, you need to pay me interest. So notes payable and accounts payable are your suppliers, but the difference is only amount of interest. So notes payable can be short term, can be long term. If you said we will pay you after a year, 360 days, then this is a long term liability, right? Accrued liability. Similarly, we talked about the prepaid expenses, right? We prepaid in advance for all our expenses. But here, this is the opposite. It means expense occurred but not paid. Your employees work for you. You need to pay salaries, but you still didn't pay the salary. So we make account salary payable. That is accrued liability. Similarly, income tax, sales tax. It's not like that you are depositing sales tax or income tax on daily or hourly basis. No. You accumulate for 15 days or 30 days and then you remit to the government, right? So 30 days you keep it yourself. Liability occurred, but you didn't pay. You will pay later. So we create payable, right? Similarly, payables are, salary payable. Similarly, rent payable. Rent occurred, but you didn't pay yet. You will pay after a week or something. But on that day, when rent occurred, you didn't pay. Rent is payable, right? Now, stockholders' equity accounts. Common stock, retained earning, dividend. We already talked about these. So all the transactions related to shares that are issued in the market are recorded under common stock. All the retained earnings, which are net income earned over company's lifetime minus dividend. How much you retain, how much you paid, how much you paid you minus, and how much you retain will be recorded under head of retained earning. Dividend mean all the distribution from the profits. We call this dividend. And remember, these are not obligations. This is the declaration by the board of members. So we are not, as a company, we are not obligated to provide dividend every year. So this is the decision by the board of directors and annual general meeting, right? Now, two others are also owners claims because business belongs to owners, right? And if we are selling something and we are incurring any expense, that also belongs to business, and business belongs to stockholders, and stockholders are owners. So that's why we call this revenue and expenses. They belongs to stockholder equity, right? So revenue means increase in stockholder equity from selling goods and services. Expense means decrease in stockholder equity due to cost of operating the business. So we have all the accounts here. So remember, if we do this example here, so we need to think appropriately the accounts that are going to use to record the transaction here. So name two things that increase whole food market stockholder equity. So what is stockholder equity? Common stock and retained earning, right? We talked about that, this common stock and retained earning. So name two things that increases the common stock, the stockholder equity. Two things are increase. Number one, net income, because net income increases, retained earning, when retained earning increases, stockholder equity increases. Other stuff is sales increase, also increase stockholder equity, or when we issue new shares, stock increases, stockholder equity increases, right? So this is the two things, or I mentioned three things here. So let's just talk about this. So can you tell me which decreases the stockholder equity? Anyone?
I have a question.
Or
If you increase the common stocks, if you increase the numbers of shares, should it not decrease in value?
no. Revenue means selling product, not selling shares.
Expense?
Revenue means your normal business operation. Your normal business operation is, for example, if selling chairs, so you receipts from selling of chairs, office chairs or furniture is your revenue. Oliver, common stock is you issue share, you receive cash, right? So this is business investment. This is not the normal routine of the business to issue share. Normal routine of the business is to sell furniture. Oliver, clear or still ambiguity?
Yeah. Yeah, clear.
So name two things which decreases the stockholder equity.
Dividend?
Well done. One. Second, if dividend increase, stockholder equity decreases. Second, you need to name two things. Expense increases, stockholder equity decreases. Right? Dividend and net losses, of course, if you have a loss, also increases. Expense increases, also decreases the stockholder equity, right? Okay. Now let's talk about show the impact of business transaction on accounting equation. So we are now doing the same that we talked about in our previous lecture, accounting equation treatment. So before doing that, let's take a 10 minutes break and then we start from here.
Okay, sir.
Okay. So be fresh, have some tea or coffee or water or something, and then we are going to start from here. Okay, class, welcome back after the break. So we were discussing the learning objective 2, and now let's have our learning objective 3, which is show the impact of business transaction on accounting equation. Here we go. So for this purpose, let's take the example, your book example of Freddy's Auto Service Incorporation. So the scenario is to illustrate the accounting for transactions. Let's assume Freddy Kish opened Freddy's Auto Service Incorporation in 2014. So we have company name, which is Freddy Auto Service Incorporation, and we have its owner name, which is Freddy Krish. So let's talk about the number first. So my question is, what are the accounts? Accounts are these. Right? So which accounts are these? So these accounts are measure assets. Accounts payable is to measure liabilities, and common stock and retained earning is to measure stockholder equity. So this is just for revision, so that those who couldn't, understand the assignment and couldn't do well in our assignment, so this is just for them, one more opportunity to understand all this. So on April 1st, Frederick Krish, which is the owner, and a few friends invested 50,000 to open Freddy Auto Service Incorporation in return for common stock. So what will be the given side and receive side? Given side is that business gave common stock, and business receive cash. So cash increase and common stock increase, right? Plus. On second Friday, second transaction is Friday purchases land for a new location and pays cash of 40,000. So land increase, cash decrease. So do we have effect on liabilities and stockholder equity? No, because the equation is balanced here. Cash decrease, land increase. So this 40 cancel, equation is balanced, right? Now, the third one is the business buys supplies on account. Buys supplies on account. This means we are buying from our supplier and we have to pay within 30 days. So how much worth of supplies we are buying? 3,700. These two accounts are involved. We will be receiving supplies, and what are the given side? We will be given outsider claim. See, this equation is balanced, right? Fourth is Friday received 7,000 cash by providing services. So automotive industry, okay, they are providing services for car repairing. So these are their sales, and sales belong to retained earning, retained by through indirect effect of net income, right? Net income is coming from sale minus expenses, right? So sale is a part of retained earning, expense is a part of retained earning, and retained earning is a part of stockholder equity. So here we go, 7,000 cash and 7,000 retained earning. Equation is balanced. So left hand side is equal to right hand side. Friday repairs a fleet of used